Good evening and welcome to the Australian Stock Market Show. Now, the All Ordinaries Index broke to a new all-time high last week, which begs the question, will we see sellers take over, pushing the market down from here, or are we likely to test 9,000 points by the end of the year? Stay tuned as we will discuss our thoughts on that shortly. We'll also take a look at the major world currencies, and for our main topic in tonight's show, we get into effective swing trading strategies to enhance stock market returns. First up, we'll share our hot stock tip for the week, so sit back and relax. Again, tonight is jam-packed as we have lots of emails to answer. We'll also take your phone calls and give you the answers to some of the important questions around the market. Tonight we're excited to share our thoughts on some great stocks like Flight Centre, S32, Fortescue, BHP, COG and more. I'm Dale Gillen, the Chief Analyst here at Wealth Within and your host for tonight. And joining me are two of our team of highly experienced professional traders, Janine Cox and Philip Tortevsky, and together we've over 60 years experience in trading and educating traders, making us Australia's most trusted stock market educators. Good evening, team. How are you? Welcome back, Janine.
Oh, thank you very much. That's so nice of you.
We have to say we missed you last week.
I missed you too.
Yeah,
I was missing out, wasn't I?
Pedro did a really good job in your absence, and Phil sitting in your chair, he did a good job too.
Wonderful.
I told him not to get used to it though.
I went vegan for the night, so that was...
You went vegan for the night. Cool, anyway. Well, tonight, as mentioned, we do get into the major world currencies, but first, let's take a look at this week's hot stock tip. Now, Phil, what have you got for us?
I've got a good one tonight. The hot stock tip for tonight is Flight Centre Group, code FLT. So let's get straight into it. On your screen right now is the marketindex.com, and Flight Centre, obviously, no explanation needed, engaged in travel, retailing, both leisure and corporate, and getting into some performance on this one. It's got a 2024 year-to-date return of positive 7.42, a one-year return of positive 10.62%, which is performing very well compared to the sector on a one-year basis, which is negative 11.91, and also beating the ASX 200 on a one-year basis, which is minus 4.44. Now, we do have a market cap of 4.8 billion, and it is ranked just outside the top 100. So a stock obviously known to most, quite a big stock on our market. So let's get straight into the chart right now, because that is the important part. So on your screen are the charts of Flight Centre. I want to focus on the monthly for now. And you'll see I haven't put on too many markings on this one, because to me it's a very clear example or image of what's going on right now. And most notably, I've marked two horizontal lines in black, one at $25 and the one at $8.43. I want to focus on this one first, because as you can see throughout the history of Flight Centre, $8.43 has been the springboard to the some of the most significant moves. It's provided major support back in 2006, again around 2009 GFC, and most recently during the COVID crash in April 2020. But on top of that, what I found really interesting was that just above where the support was at around $17, $18 in these pinkish rectangle boxes, we saw an agreement in price at around $18. And that's really, really important, because we've seen in the past price agreed really at exactly the same levels. And what do you know? We're seeing that happen right now. We're seeing real sideways consolidation at around $18, which is also being supported by this nice uptrend momentum. You choose which one of those lines, both is applicable. But given we are seeing this accumulation following a nice contraction move, to me, the next option is either more sideways action. If it breaks through this trend line, then we're going back into contraction again. But if it starts to break onto the upside, we're looking at expansion. And if you look at some of these other runs, as I run my mouse cursor over, when this stock gets going and runs, it runs quick. So to finish things off, I've got two numbers marked there, number 1 and number 2. And purely the reason I've got those marked is because when you're factoring in the $25 level here, which has been resistance in the past, so it is definitely a level to watch. It's all about weighing up how you're going to trade this and what your risk reward scenario is moving forward. I would argue that trying to transact that around underneath the $25 mark is the high risk play. Anything above $25, which is where I've got mark 2, on the flip side of that strong resistance is the safer play. And if this stock's got legs in it, considering the long sideways accumulation that has happened, I think you've got plenty more upside, even above the $25 mark.
But could you be splitting hairs a little bit with that level? Because, I mean, these are never black and white things, are they? Let's face it. So, I mean, if it's hit this level numerous times and even gone through it, it could be slightly lower. There's these highs, 1, 2, 3, 4 here. Depends on how risk averse you are, doesn't it?
I think I said around $25, didn't I? The
said
Kiwi was around.
I know she's coming back and she's
already given it to
you.
you.
Yeah, why not?
Well, that is it for our weekly hot stock tip. Now, shortly we're going to get into our topic for the night, but before we do, right now is your opportunity to get involved in the show and have your questions answered. Now, remember, we prioritise phone callers, so call now on 03 9290 9988, or you can text your question to the number on your screen. Now, the first caller into the show right now gets a free copy of my book, Accelerate Your Wealth. So pick up your phone and dial 03 9290 9988. Now, while you do that tonight, we will give you our thoughts on major world currencies. So let's get into that.
On your screen right now is a watch list of major world currencies. Now, this is really interesting, isn't it, at the moment? I mean, the British pound is up the top there, and we're up almost 5% on the British pound versus the US dollar. And the Australian dollar is really hanging in there. It's up 0.86%, so close behind. I wonder if we'll be on the top of the leaderboard soon, Phil.
Well, there's still about 4% to go. But I mean, it's interesting you mentioned that, because obviously the pound was at one point, really languishing down the bottom, but it's had a stellar run against the US dollar and the Aussie now, and the US just cut rates in what was considered a bit of a surprise move. So yeah. I think that
I was surprised that it was so much.
So much, sorry,
they were
yes.
expecting 25 basis points, but they did 50, so like 0.5% move. That's pretty big.
Which is going to be, I guess traditionally buoyant to
that's right. The
all
currencies
the other
are going to move now, aren't they?
Yes.
So the Aussie dollar obviously up 0.86%, Euro dollar 0.68%. As we come down the list, the ones of note really, I think, down here, for me anyway, is the Japanese yen versus the US dollar. And you've left off my...
I've put a chart on there for you, especially so we can get into it.
You're just trying to trick me, aren't you?
I just took it off
I was
the watch
looking for
list,
the Chinese currency, the renminbi yuan, but it's not there at the moment. We're going to have a look at a chart shortly. But the Norwegian krone, you put that on there. That's not one that I generally follow, so that's interesting. It's actually down 3% versus the US dollar. That might be one we have to check out on a later show.
Well, yeah, it made it in the G10. This is a list of the G10 currency pairs. But I know you're really edging to get into the Chinese yuan. So
let's have a look at that. So on your screen right now, you can see the long-term view of what's going on here. And it's been a steady decline, but the last 3 months, we've seen a turnaround in this currency pair. And so let's have a look on the right-hand side. We can see a consolidation. Now, often when you see these types of consolidations, it's very interesting to watch what happens afterwards, because it's actually not by accident. It's actually a measured thing. You just look at these lows here, and you can see there were 3 attempts actually to go lower, and it's found support and started to move up from there. So this could very well be the turnaround for the Chinese yuan versus the US dollar. There's a nice little low. I'm going to expand the chart so we can have a look. From a trader's point of view, this is like a little dream, isn't it? The way it's moving at the moment. And looking at the last trough we've got here on the weekly chart, that's a really nice level of support, just their short-term support for it. In terms of the upside potential, I mean, it could keep running over the next couple of months. We had some highs here at 14.5 or thereabouts, so it could keep going, probably a little bit higher, I think, even.
Yeah, look, and really it's going to depend also on the policy China implements moving forward. Obviously, US cutting rates and the relationship there with China. Obviously, if China starts doing that as well, then you might see that stall a little in terms of the future growth. But, while it's trending, of course, why not? And I'm with you, a move up to 14 odd cents. If we just zoom it out, look big picture, you can see that with a horizontal line through here that generally over the last, or I guess since 2016, it
wants to track that way, doesn't it?
Median price, loves to head back to around that 14 cents. So one to watch for sure.
Excellent.
Yeah, I agree with both of you. on whatever you just said. I'm only joking, I was listening. But anyway, that is it for our thoughts on major world currencies. But before we get into our first email, remember to get your questions answered live on air. You do need to call or text into the show. You can also send your questions to info@wealthwithin.com.au and we'll answer them in next week's show. Now, before we get into our first question, we do this show every week for you, and it's free on YouTube. All we ask of you is to click subscribe. So do that now, and whilst you're there, click that like button. Now let's get into our first email. Should you take notice of directors buying more stocks? Well, Sydney asks, hi team, I love your informative show. I'm a long-time holder of COG. I noticed some buying by the directors, but the stock has been dropping to new lows despite a good result. What do you think about the fundamental and technical analysis? I want to go to you, Janine.
Oh, look, can I say that I'm not excited by it? Really interesting to bring this up. It's something that a lot of people follow.
Which part aren't you excited by?
Well, I'm not excited by the whole thing about directors buying and then you should potentially follow the stock. It's just not a theory that you want to be practicing in the market. It doesn't mean that if the directors are buying that the share price is going to go up. They could have been given some shares as part of their remuneration. That could be why that the shares are being bought. So I would be very cautious about this with a stock that's falling so heavily as it has been. But in saying that,
maybe they know something that everybody else doesn't know.
Well, there you go. That's what the theory is. But is that a bit of FOMO that kicks in as to why people are looking at this sort of thing?
I'm just playing devil's advocate because people go, if the directors are buying, they must be thinking there's something there that's going to go up.
Can we just look at the chart now?
Okay, we can look at the chart now. I think that was a polite way of saying, Dale, shut up.
If we look at the chart, we can see, though, that you were saying that is there something they know that we don't know? Now, as it turns out, there's actually what looks like a significant level, and it just happens to be around my favourite $1 mark here. So it's possible that the stock could find support there in the short term, but it's by no means over. You know, it's been in a decent decline since, well, it peaked in, 2022, is it up there, the high? August 2022, so it's been going down now for a couple of years. And there's still the possibility for a further fall. So, you know, it's high risk in my view. I wouldn't be following what the directors are doing. I'd be waiting to tick about 4 or 5 technical boxes before even considering it.
Yeah, I'm with you. I mean, would you even consider trading this? If you just look on the weekly chart, the volatility, the weekly volatility, the spikes in price, I mean, one, you either need to be quite skilled in terms of the technical analysis, but two, why would you even bother trying to get involved or transacting in pockets like this where the price is going to fling you up and down all throughout the place?
It's a mug's game at the moment, isn't it, with this stock?
Yeah.
So that's really all I've got to say on that one.
Well, you've said a lot anyway, so that was all very good value for us anyway. But, you know, we don't do fundamental analysis on this show. All three of us are technical analysts, so we won't make comments on that. It's just, that's not our forte, so we'll stick to our technical analysis. But you are a long-term holder of that stock, so you've obviously held it all the way down, so it's up to you whether you continue to hold. But Gerard now is asking about EOS, and he writes, I would appreciate your forecast on Electro-Optic Systems Limited. EOS designs, develops and builds the world's most accurate and highest precision remote weapons systems. Wow.
There's a couple of things, isn't there, with that one?
There is. There's a couple of things. Do you want to tackle this one, Phil?
Yeah, sure. Let's go to the chart for you, Gerard, and have a look, because that's where we're really going to see what's happening with this stock. And I want to focus on the monthly chart for now. But, I mean, you know, Gerard, obviously a regular caller into the show and now a student, which is quite nice. But coming out of this all-time high, you can see this stock's been in free fall and moving back down to near the all-time lows, down in 41 cents back in November, December 2022. And when you see things like this, it's one of two things. It's, you know, either this whole run-up was a whole bunch of speculation and with no real solid company, if you will, fundamentals, or, you know, a lot of the time when these stocks run up and they fall all the way back, you realise companies aren't making any money or earnings are dropping, or there's something, you know, not going right in that company. And right now we are seeing it base through December 2022. I like the fact that we are seeing signs of higher highs and higher lows. Higher bases generally means that buying is being supported. But at these levels, given, you know, we're so far away from that previous all-time high, you want to really dig in and see maybe what is going to be that catalyst that's going to drive it forward. Is there a change in the dynamic of the company? For one, if you're looking long term, if you're thinking more short to medium term, because that's the option right now for me. If it's more of a short to medium term play, speculate on the speculation and trade the price action alone. That's fine.
But not right now.
But not right now. You want it to get through at least $2, in my opinion, a break out of this sideways move to see that continuation of price action moving. But if you're looking long term, then there's got to be some substance behind it, because why would it get back up to $10 if things aren't well?
Well, that's true. I mean, obviously, it's in the defence area. That's what this stock does. And just because there's a war or some wars on, there's always wars going on somewhere in the world. And you'd think, okay, well, there's a big war going on at the moment, roughly, and you think the stock would take off, but it's not really taking off, is it?
You think it would have been going up in a long-term incline, but it's actually been in a long-term decline the whole time. The conflict's been happening, and like you say, Dale, it's only the last couple of years it's turned around, but even so, it's the last sort of 8 months it's sideways. It's not really going anywhere. And I agree with Phil. You've to just be very cautious. You've got to wait for that. But I'm really excited that Gerard is actually reformed. So well done.
I mean, he's reformed.
He's into the technical analysis now. It's not just the fundamentals.
He has been. He completed our short course a while ago. Now he's enrolled in the last 2 modules.
That's wonderful.
So he can complete his education.
Yep. Amazing.
Yes. So give him 2
Make
thumbs
sure you
up.
use that support, Gerard. That's all I'll say. 2 thumbs. There you go.
There you go. All right. Well, thanks for that. We now have a text from Martin, and Martin says, "Hi guys. How do we account for dilution after capital raises on charts? For example, many biotechs needed to raise funds over a long time. For instance, if a previous all-time high was $10 and shares on offer increases 50%, how does this affect charts?" Many thanks, Martin. Do you want to talk about it? The dilution?
Dilution.
Dilution. Talk about it.
Pardon?
I'm asking. You want me to talk about it?
Yeah, you can if you like.
That's right. You can do it.
Well, look, when stocks get diluted, I mean, there's always a challenge there because it's about a price point. Sometimes the share price will get diluted below that dollar mark, and that's the problem. When they go the other way, it often props up the share price. So maybe the stock, if it's getting down to a lower price point, will be perceived as cheaper. Therefore, there's another area of the market that get exposed to that particular stock and more demand potentially.
Well, Martin's asking, how do we handle it on the chart?
Well, look, that's a challenge, isn't it? But the chart gets adjusted. So if you've got good data, it shouldn't be an issue at all. You should see the chart be adjusted, and there shouldn't be any significant gaps in there after that occurs.
Well, that's the challenge. A lot of traders, or people that call themselves traders, try and get free data, and free data is not what we call clean data or adjusted data. So we only ever use adjusted data, Martin. And what happens is, if it's a 2-for-1, basically, if it was $10 and now the stock's $5, what they do is they factor in from all the past data on your chart. So the data then also gets halved, basically.
It gets adjusted back.
It completely gets adjusted back, so it looks like a normal chart, as if everything was...
Sometimes it can actually take longer than you think for them to correct that, especially with the lower end of the market, I've found.
It does sometimes.
Yeah, so I was looking at a few stocks and I'm thinking, oh my goodness, the share price has dropped away, but then I found out that it actually occurred. And people potentially were shorting it, thinking that the stock was in a long decline because they hadn't attended to it quickly.
Very, very much so. So it really just the same. If you'd been, like when you used to hand chart, I used to hate it when I was hand charting, and it's like,
just wait.
They did a stock split, and it's like, now I've got to rechart the whole thing again to adjust it all, because otherwise your hand chart looks all out of place. But anyway,
I'm glad we've come forward to the present.
You've got it easy now, Martin. Just find clean data, you'll be fine. Now I'm sure you've heard the saying, and maybe even do this yourself, and that is, make your trading simple. But what is simple? Now to me, it's simple means clear, distinguishable, and most importantly, a repeatable approach that is effective, as this ensures you generate great returns consistently. Now take swing trading, for example, which when used correctly is highly profitable. But here is where the twist comes. Now I constantly find many complicate this powerful strategy, and in doing so, reduce its effectiveness in beating the market. Now if you are a new trader or hearing this concept for the first time, I do encourage you to take a look at an article I wrote titled Swing Trading Strategies That Deliver Results. Now you can find the article under the Learning Centre tab on our website wealthwithin.com.au. The article covers the foundations of swing trading that you must understand so you get it right. Now let's dig deeper into the core of swing trading, and here I want to get our panel's thought on what exactly happens during a swing trade. I'm going to go to you, Janine.
Right.
We used to call you the swing queen, didn't we?
We did, and look, we had many workshops where we got into the swing, didn't we?
Yeah, she loved it. We didn't get into twist, it was a swing.
Yep. But this is about buying low and selling higher, isn't it? Or buying higher and selling higher.
Absolutely.
And it's a simple process, the swing trading, but I mean, that's the positive side of it. Obviously, you're not getting the full picture with swing trading. You've got a simple strategy that anybody can use, but there's a lot more to it than that. So I wouldn't like to just sort of paint the picture that that's the be-all and end-all.
So basically, yeah, okay. So basically we're saying to people, buy low, sell high. That's what we're saying.
Yes, we're saying that.
Or keep buying and showing we swing trading on that. I think we've got it all, but I can't argue with on that. If you really listen to what Janine said, she's actually given you the golden key to trading any single market on any time frame and doing it better. Successful trading is all about direction and strength around the price, and that's what she was talking about. This raises the question, can swing trading alter the incorrect perception that to be a successful trader in the market that you need to trade intraday? Now, Phil, you're our short-term guru.
I am, yes, and it pains me to say this, but it's true. It really is, because at the end of the day, what Janine's talking about is swing trading is capturing the big moves in the market. Intraday trading is not that. You're working very hard to capture little minute pockets of the market, often which is associated with higher costs, a lot more work, and weighing all that up versus letting trends run. Because let's face it, at the end of the day, real trends, strong trends, particularly in the stock market, they take time to unfold. They don't unfold in a day or a week, they unfold over time. And often if you stay in the market long enough, you'll realise that the market ranges for much more than you think, and the strong moves happen in times, but not as often as people might think. So it's really important what we're talking about here. It's a far superior strategy if done right.
Yeah, to me, I mean, it's such a simple strategy, swing charts. Even a 10-year-old can follow them.
Well, that's where we all started, isn't it? I mean, with the swing trading, but then realise that the bar chart actually gives you a lot more information.
I think 9 out of 10 people they talk to me about swing trading don't know what they're talking about. So, but anyway, spot on, Phil, anyway, with your comments. Now, the swing chart can take away that need to trade all of the time, as it provides higher probability setups. So let's take a look at this perspective on swing trading from Forbes, which says, swing trading aims to capture profits from smaller price movements within a wider trend. Now, these articles really help explain why so many fail to utilise swing trading to its fullest potential. Swing trading is not about capturing small moves, is it, Janine?
Well, that's interesting, isn't it, based on what Phil was just talking about before. Absolutely. People think that. It's the total opposite. So I've read so many articles on Forbes and I've thought some of the content's actually quite good, but when they said that, I thought you're just contributing to the problem and the view out there that people perceive that you use it for those short-term moves, and you don't. You can actually capture decent parts of the trend if you actually know how to use it effectively.
You don't, and I liken it, people, they talk about it's like buying the dips. They think that's swing trading, and it's not swing trading. It's actually not that effective anyway. But how about now we look at some opportunities, Phil? So, because I mean, to me, just before you bring into it, swing trading is very much about strength and direction. They're the two critical things that we need to understand as traders in the market, is strength of a move and the direction of the move. Get both of those wrong and you're not going to be that profitable. And swing charts are the best things that I have ever seen in helping us understand direction first and strength of that direction. And
well, it just sort of removes a lot of the noise, which is what we're going to show on the charts. Whereas, if you're trained to read a bar chart, you can see it. But a lot of people are not trained to do that. Now,
because you're going to bring up some swing charts, yeah?
Yes, we are.
Most people, and guarantee, unless they're our students, I would say most people have not seen a swing chart in their life before.
Well, we're going to explain it a little bit because, as you guys said, one of the most critical elements of a swing chart, especially the one that we're going to bring up, is the fact that the time element is eliminated. You know, on bar charts, there's time, you know, weekly, daily, monthly, minute, second, whatever you like. But with a swing chart, particularly the one we're going to show, it's all about price. So how about we just get into it and bring up the first example, which is Santos. And we wanted to put them side by side with each other. So we're going to start off, now we're on monthly charts, by the way. So you'll see on the left is a bar chart. If we zoom in, it's very much like what we show on the show every week.
Santos is a volatile share, so there's a lot of noise even on the monthly chart. Generally, you'd think that that was a weekly chart for a lot of stocks,
absolutely.
wouldn't you?
Yeah. Santos is one of the most volatile stocks in the 50, to be honest. But moving to the right-hand side, which is the Gann swing chart. Now, I'll zoom it in a little so you can have a good look, but basically what it represents is that as this green up, it's almost like the snake game that was around in the 90s, but you know, this green up...
It was around a lot earlier than that.
Was it really? Okay, well, I guess so, right? But if we go back to the chart, you'll see that these up moves represent an up movement in price, and the red represents a down movement in price. And just one look at this particular period, which is from around March 2021, and we compare it to what's happening in April 2022.
Can you just enlarge that bar chart? I don't want to have to get my binoculars out.
Sure, I can do that. But it shows you the difference in, I guess, visually, how clear it is to see the swings up and swings down, the highs and lows.
As long as you get the colour coding right.
Well, yes, that's the other thing. But what it also shows you, and I just want to zoom into this particular period from December 2021, we saw this really strong upswing up to December 2021. This one I'm showing through here. Now, you can see the price is, I guess, confined within that whole price movement. Now, when looking at a bar chart, you're seeing it flick up, down, flick up, down. It's giving you visually two very different looks, if you will. And like Janine said, these swing charts really make the, I guess, analysing of price action so much more cleaner.
Yeah.
And it helps. I mean, at the end of the day, if you are purely trading price action, then being able to analyse it in its purity, if you will, makes all the difference.
Yeah, I mean, when you're looking at these bars, you're sort of on that left-hand side, you're thinking, where's the point to get out? And like, you know, the most obvious one on a bar chart showing that low in December 2023, once that low's broken, it's clearly going to be continuing that decline and breaking out of that sideways move to the downside. But here you can see that it's already weakening as soon as it goes through these successive lows, because it's taken a lot of effort to get that swing to turn up and for the buyers to push it higher, only for the sellers to bring it lower. But, you know, you can see where the tug of war between the buyers and the sellers and who's winning, you know, the game. So that is another way, you know, I like to look at it.
And even support and resistance, you know, when people draw support and resistance, we had this discussion on the hot stock. Where do you draw it? Is it the 10 cents, 9 cents, 8 cents? When you're looking at these swing charts, it makes it so much easier to apply support and resistance because you've got very clear levels that you can mark through. Now, look how clean that is, touch versus you're going to get ticks up and down on a very...
Gee, we might even agree then.
On the similar price level through here. I mean, is it there? Is it there? Is it there? Do we agree? Yeah, we always agree, Janine.
Always.
Just come back and...
You always agree, except when you don't. Is there another stock?
Yes.
Can we go? Okay. You've colour-coded these beautifully in pink for us tonight.
Yep.
All right, we've got Bendigo and Adelaide Bank there, which has just rocketed off. Now, the thing that I like about this is when you're looking at the bar chart, you can obviously see there's a clear move up, but, you know, you're looking at it and thinking, well, where could I have bought? Could I have bought back in here, down here? The bar chart, the swing chart showing you that these swings are getting lower and lower. It's like, watch the bouncing ball, everybody. I'll mesmerise you and you'll be hypnotised. That's the whole idea of this, okay? So when we come back down to this low, you can see those lows are starting to get higher again. It's changing direction. So as Dale was saying before, the most important thing here is price. So it's the range in price. It's also the direction that price is moving, and it's the strength of that move. We can see that the swings, the length of the swings, were starting to get longer in the positive direction here and then shorter temporarily. So you'd be thinking, oh, what's going on here? You know, it didn't continue on. Oh, there's a bit of resistance on the left-hand side. It swung down, but it didn't take out that swing. It's turned around, gone back through there. Right, they're on their way again. The buyers have got control. I'm going to be with them.
You said it perfectly. It really shows you that example between buyer and seller. Green being buyer, red being seller, and you can measure in a clean way the strength of these moves. How strong is the seller versus how strong is the buyer? And really, that's what it comes down to at the end of the day. When you're talking about price analysis, it's all about that relationship. We speak about it so often, you know, the relationship between the buyer and the seller, short-term, medium-term, long-term. That's where you gauge what that next move is, because at the end of the day, if you can't have an idea on what's going to happen to the right-hand side of the chart, which is what's coming next, then your analysis is pointless, right?
Yep. And look, we're on a monthly chart, so we're
Oh,
showing
monthly
that people
chart.
can go monthly. They don't have to do this on daily, and that's why that article by Forbes really annoys me, because it's just cutting people out of an opportunity.
Well, it makes people think something that's wrong, you know, and they're leading them in the wrong direction. I know you and me, during, you know, up into the GFC high, we were swing trading all the time and making a mozza out of that.
Oh,
It was like so easy. It was like, you know,
There were some
it's like
students-
stealing candy off a baby. It was using swing charts.
Students who were first starting to use the technique that were getting into this, and it was just too easy, they thought, at the start when they were using it.
Oh, it is, and it feels almost like, can I say, almost criminal that you're using such a technique that's simple. But so powerful, and you think, I'm not doing too much and I'm making a lot of money, and it's really easy and I don't have to spend a lot of time analysing. And
Well, one thing
know.
I sort of scratch my head out, and you probably have your own opinion on this, is in the lots of online chat and articles, they talk about swing trading, and they try to have different settings and try to be too cute about how they set the swings.
well, you can set
and
it
I
as
just
a,
don't see the point in that.
1 bar, 3 bar, you know, all sorts of different filters you can
To
put
me,
on
that's
it.
like if people are trying to trade too short a term, that's what they're doing. You know, that if you're trading over a decent time frame and not trying to intraday trade, then you're not going to have to worry about any of that.
No. Okay, we've got another stock.
We sure do. All right, so next we have mineral resources. Now we wanted to show, obviously mineral resources having a bit of a rough time of it at the moment, but we also wanted to show as it moves up during a trend and also falling down, how you can really use the power of these swing charts. And what I mean by that is, as the stock started falling, you know, some traders there would have looked at this and thought, okay, it's coming to a low here, it's tested a low, it's broken through this particular high, there's an entry through these levels. You showed strength at you know, $58, but when you take the swing chart, for example, look what you're seeing. You're seeing the all-time high, lower high, so basing lower, and we're taking out each low. And then when we're looking, you know, this is a little giveaway, but when we're looking for stocks to find support, obviously we want to see them, you know, find those higher bases. Now, on one instance on the bar chart, you might have said it's a test of a low, but when you look at the Gann swing chart, you don't see any of that. So it saves you by just really amalgamating price in its what's the word I'm looking for? You know, when you round off something.
Oh, look, reducing it, or you rounding down?
That's what I was saying. Something like that. But just saying that price is not so confounded by time.
Yeah.
It's just, you know, you're seeing the swing.
Simplifying, is that what you mean?
Basically, yeah, I've completely messed that one up, haven't I? But look, let's get back to the chart and show that exact example, because
Well, you bring it into its purest form.
basically that's the point.
Yeah,
Which
bring price into a pure form.
which compared to on a bar chart can get messy, and then hence give you that false sense of a price doing something that it's not actually doing.
Can you just have a quick, on that uptrend, can you just show those gaps on that uptrend and how powerful they are?
Yeah, let's have a look at that. We'll just
because it's
open
a
up.
perfect example.
Isn't it?
Yeah, we're not talking about gaps like we've seen in charts where the price actually gaps away and it doesn't trade within the range. What we're talking about is how a stock can actually swing up, swing down, and then it makes this big move up, right? And comes back, and it doesn't meet the prior swing. It actually turns around and heads back up again. Often the simplest trades that you can find are those ones where it does that. So that's probably what Dale's talking about there. But the thing that I also like here is that the lows are getting higher, and all of a sudden the highs don't go higher. So it's telling you something about the change, big swings up and down, the same sort of ranges, and it's telling you the personality of this stock's changing, direction could be changing. It then tracks sideways. It's a bit of indecision. It's, the buyers and sellers and tug of war. All of a sudden the sellers win. It comes back and finds support here, but reverses up. Once it takes out all of these, highs here, then it's telling you it's going to keep going up, which it does in quite a dramatic way. So, there's lots of, for the beginner, it's just fantastic for the beginner.
So simple. All right, next stock.
All right, next
Sure, you got more great examples.
we do. We've got Wesfarmers. Now, this is a nice example of a few things, but for one, we're seeing, because it's one thing, when we talk about periods of accumulation, we speak about that a lot on stocks, and they're very important because stocks go through these life cycles. We've shown different examples of it, phases of the market. But if I zoom out on the monthly chart here, you can see some very distinct levels, which on a bar chart can sometimes be tricky. Like, for example, this could be considered a consolidation to some no. This could be, but then it may not. But when you go to a swing chart, and I'll open it up, because it does confine price until new price eventuates, you can clearly see these sideways congestion moves, and they make things so much more clear. I mean, there's a really clear example of that there. There's one through there, another one coming through 2011, and a huge one which happened in 2012, 2013. And it's very important to identify these particular levels, because we know, these big accumulation moves that happen, which we saw on our market from 2000 to 2024. A lot of people are thinking, why is our market so bullish at the moment? Well, hello, it went sideways for 4 years, giving you a textbook indication of what was likely to come, particularly if it was going to break out. And so seeing that on a Gann swing chart so clearly really helps identifying those opportunities as well.
It's also sort of giving people comfort too. When the swings start to get bigger, there's a positive side to that, in that you could make a decent amount of money, but there's also the downside to that, in that the stock could be changing. So it's sort of giving you warning about what could be happening. And I'll just expand this chart a bit so we can see that. So, once it's in this sort of nice phase, eventually it's going to end. That's the reality of it. And it's about being prepared for that and just having a look. So once it took out that little low there, it automatically changed, into a stock that was in a decline, and swiftly so. But I just want to come back to these sideways moves, because sometimes you can get pushed out, and at times we do get kicked out of stocks, but the swing chart might actually give you opportunity to stay in a stock longer if it is that you're wanting to get dividends from it, which is going to be the topic of another show that we're going to have shortly if you're interested in making money from dividends.
Okay.
And because it doesn't factor in time, if we just go back to the chart, it's a very important point. Time charts factor in time, so you're constantly looking at, weekly, daily, whatever you're looking at, monthly. But you could draw a few lines on this particular chart, knowing that this only accounts for price. Time is not a factor. So for new swings to occur, price needs to either move up or below the previous move. So if we just applied, a simple horizontal line through periods like this, that, hey, I've got a clear level that I need to watch for price to break through for that situation to change. And that's where you can apply your alerts and what have you. So taking a lot of work out of your analysis, which most people would probably prefer. Right.
Next stock.
Wonderful, isn't it? All right, now the next one is a nice little volatile one. So we thought we'd add this one in here because, some of the big stocks can be just quite boring, can't they? You just sort of yawn because the swings go, the way that they do. But with these ones, it sort of gives you a little bit, your heart rate, gets your heart rate going a bit more. So with a chart like this, people often ask, well, how do I get into these things once they're running like that? And that can be
swing charts.
Yeah, so swing charts can be a way to actually give you that opportunity, because you're just waiting for the little swing down to occur and for it to turn back up again. And once you get that turn back up, a stock like this that can be so volatile can give you, and it's a bit hard, I think, to be able to lock these on to the swings, but we'll see how we go. 120% in a swing up. The challenge is then, how do you actually get out of it? And that may mean that you need to go to a different time frame to be able to do that. But this is all great exploration and opportunity to learn these things. It's so important, particularly at this time in the market. I think, as we're coming into a peak over the next few years, it's going to be critical, isn't it?
Well, it is, and I think it's critical that people understand these techniques. And to me, I was so excited when I learnt swing charts. I was like a kid in a lolly shop. I thought they were brilliant. But I want to caution people that if you start looking at swing charts, there's so much misinformation about them, how they work and how you actually even draw a swing chart. And I know I come across people all the time, they're just doing it wrong because they just haven't learned properly. So just make sure you're getting it right, otherwise they won't work as well as what they do for what we teach our students. But let's get to another stock.
All right, so next, did you want to say something else?
I didn't actually get to talk about this one though. We were just getting started.
All right.
Can I just finish off what I wanted to say about Zip?
You might do that quickly.
All right, so if you have a look at this, once a stock, so we've talked about lots of spec stocks on the show, right? People ring in about these stocks, and a lot of them have these basing patterns. And you sort of think, well, where do I buy? And the first move up is always a sucker's rally, or quite often the sucker's rally. You know, you had this rise out of the low, then it keeps basing, it's trading lower than where it was before. But then all of a sudden you get another move up, it challenges that high, comes back, there's a short pullback, the buyers are actually pushing it in control. I mean, this makes trading spec stocks a lot simpler in terms of getting the entry, but remember, they fall, it's like going up in, stairs and coming down in elevators. Yes, in the lift, so you just got to watch that lift on the way down because it can be quite volatile, and you may need to look at a different strategy and potentially combine strategies to be able to get out at the better opportunity.
If I can just quickly add something to that one. Because what's so important about a benefit of these charts is how easily you can see, because a lot of these specky stocks, they get stuck in these real tight ranges, and these charts show you how quickly when the nature changes of the stock. So when you see a change in the volatility, which is much easier to see on a swing chart, you know that, hey, things are changing here. It's moving out of that basing type move, and maybe now's the time to look at it.
All right, we've got 1 minute per stock now to get through a few more.
Okay, awesome. IGO is another volatile one that's had this massive decline, and we're now seeing a lot of the big miners potentially start to turn around, and could it be a turnaround story for IGO at the moment? We're seeing these opens and closes at the same level. Now what's happening on the swing chart at the moment, it's good to have a look. We haven't really seen any indication that the bottom is in, and that's what Phil was talking about earlier. You need something to show that the buyers are actually pushing it higher, and not just a single move off the bottom. You want, ideally, for it to swing up and then swing down again, you know, and confirm that it's on its way, and then you could look at the move up here. I mean, that's just a magic little run. So once the stock's done it before, potentially it could always do it again.
Well, if you're watching and you haven't noticed by now, you look at all these trends, they all exhibit a very similar type of move. It's, you know, up, higher, 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 higher. And that's what you see in trends. And whilst it may appear simple and you might be thinking, hey, you know, it's okay, it looks okay, but the power in it is in the simplicity. And often when a stock is in trend, it's going to exhibit those exact moves. So very simple things to watch for. I mean, that's the power in it to me.
All right, next stock.
All right, next one is 360, Life 360, which we love, a great concept. Looking at that, much more volatile sort of stock. You can see the big swings in price here, up and down. This is the sort of stock that can give you great opportunities, but some people, they just are using completely the wrong strategies to trade stocks like this.
They do, and the thing is, you can see there on that swing chart, it's just easy to trade. Just so easy to trade, good looking stock. It is quite volatile, but you can see again, those big gaps. You know, it just shows there's a lot of buying into that, you know, not as much selling into it. So they really give us strength and direction. So I love it. So you've got a lot.
Especially with these type of lower liquidity stocks, because people can get tricked out of them. So just looking for the specific trigger is really the key with these sort of stocks. So next one is, I just took the liberty of moving on. No?
Nope, we're not allowed to move on.
Not allowed to move on, that's it, is it?
I'm the one that says we can move on. Anyway, well, thanks for that, Janine and Phil. Now stay with us, and we'll be right back after this short break. This week on Talking Wealth, discover Tobias Durson's top 4 leadership habits for transforming your organisation.
If we want to make a change to our culture, we need to change what we repeatedly do as leaders, because the signals we send will shape the culture.
Gold's on fire in 2024. Dana Samuelson joins us to discuss.
I have never been more bullish on gold than I am right now. What's happening is gold is becoming a world reserve currency again.
Drive business growth and discover how to transform your workplace with Patricia Bathory.
A lot of people are still caught up with the equation that worth comes from performance. Real meaningful work is when there's a purpose behind it.
Get your free 7-day trial now to watch this and more.
Only on Talking Wealth.
Well, that amazing content you just saw is going live this Thursday on Talking Wealth. Now, moving on, if you want to talk about a stock or ask a question, pick up your phone right now and give us a call on 039290 9988. That's 03 for Melbourne, 9290 9988. Or you can text the number on your screen. Now, whilst we wait for your call, let's get into our next email. Buy a property or go for a REIT? Well, Michael writes, I'm currently torn between investing in a rental property or a property REIT. I looked at FPP as it is very cheap right now. Could you provide your analysis, please? I'm going to go to you, Phil. That's a good question.
That's a great question because, most people, well, I shouldn't say most people, but there is that option out there if you are looking to get into the property market. It's not always having to buy a property. And I know this one, we did a bit of research. It does have global, international exposure.
Okay.
So to the international real estate market. And I mean, from a trading or technical perspective, it's actually presenting an interesting opportunity. It's coming out of the all-time low March 2020, which it tested back in June 2023. Obviously, it hasn't been around for that long, floating in 2017, but we often see this, stocks list, they get that initial euphoria or hype around them, and then reality sets in. They fall back below the float price, only to then start to find their feet, find their base, and get going. Now, a test of the all-time low is a very important move in the long term for this one. The fact that we're seeing a period of accumulation, which again is a nice pattern that you see around lows, and we're starting to see a little bit of expansion, although it's not great the way this particular month is unfolding. So I would say if we can get price above, if I can get this line through here, price above 76 odd cents, given it is showing those high bases coming out of accumulation, I think there is further upside potential to back to the levels around, what are we here, 91 odd cents. So definitely short to medium term, there could be a trade in there.
So, REITs or property?
Oh,
I think
it's a toss-up.
Well, yeah, I mean, REITs, if you're looking for liquidity, it's REITs, right? But if you're looking for bricks and mortar long term, you need to know what you're investing in,
I
right?
think if you're going to look at Victoria, don't, because the taxes are too high and as an investor.
Yeah, that's true.
So, but it could be depending on the market and how that's going. But very, very good question. So, if you don't want to have a chat with us, remember to give us a call on 9290 especially if you've never called into the show. Make it your chance right now to pick up your phone and ring 9290 88. And we now have a text from Paula, and Paula says, good evening and thank you for a great show. Can I please have your view on BMN? It had a nice pullback in the last few months and looks like it's on the way up again recently. I would like your opinion on it if this level may hold. A buying opportunity and upward run can be expected. I'm looking for the short to medium term. Thanks, Paula. I'm going to go to you, Janine.
Look, short to medium term, I think you're right, Paula. It's a volatile stock, so you're really into the movers and the shakers in terms of the stocks on our market here. But looking at the stock, it has really nice runs when it gets going and then consolidates and runs again and consolidates and runs again. And that's the sort of thing that you really want to see. You also need to look at how it unfolds to the downside. How easy is it to actually get out? Because a lot of people are just looking at how much can I make in terms of, how far it runs. But this is sort of a bit of an indication off the bottom there. It's probably a bit too early at this stage. I'd prefer to see a little bit of a consolidation if you're not already in it. It's already gone 58% off that low.
That's huge.
It is huge, and it's sort of right near a, let me just grab that horizontal line there to show you. It's sort of probably going to slow down at this sort of level or just above, even though it's closing high so far. I'd watch to see where it closes at the end of this week, but it could stall, temporarily here. The next level above that and the upside potential is definitely there. Like there's some opportunity up here somewhere around $3.60. It could keep running to that level and higher.
Would you be trading it?
No, I wouldn't, not at this point in time. There's not enough of a confirmation off that low for me, but that's just my opinion.
Well, considering we did showed everybody the
swing
chart,
chart, why not
show it right here? Because what we're
Yeah.
speaking about is
Well, there you go.
exactly
Bring it up.
what Janine is showing. So
Change
let's
it
just
to a swing chart.
Let's just go to the chart and we'll turn it into a swing chart for you.
Yep, happy.
Really quickly here, and if you ask the question right now, are you seeing signs of those higher bases? Well, let's go to the weekly chart because we've gone one step further. But in the previous example where significant lows were made, look at this, higher low, higher than the previous low, it's holding a low and it starts rising. Are you seeing any of that right now? That probably gives you your answer.
There you go, from the team there, Paula. Now remember to show your support for our channel and smash that like button. Could this stock be the next Zip or Afterpay? Well, Jack asks, hi guys, I've been looking further than the top 200 stocks to invest in, and I'm looking for your thoughts on Before Pay. They are small loan companies similar to Afterpay. I'm not a fan of using these companies, but wondering if this could be one to jump in on before it explodes. I'm going to go to you, Phil.
Good choice. Oh, well, interesting choice. That's what I'll say first up. We'll go to the chart and have
Interesting can go anywhere.
It can go anywhere, you're right about that. But the reason I say interesting, because obviously ZipPay has been that darling of the market for so many years. And when you look through the books, it's still not making money, negative earnings. This company here just recorded positive earnings in 2024.
Wow.
So, and for one of these payday lenders, which normally carry
great.
high levels of debt, it's not that common, but it is showing signs, or it does have a nice tailwind fundamentally of why it should go up. And, you know, again, one of those stories, list, drop out of bed or fall down following list, or contraction, if you will, accumulation, following accumulation on the breakout should be expansion. And the fact that, you know, we've got really strong accumulation, we have seen the first sign of a higher base in June, July 2024. And as we're rising out of here, what's interesting to note is each of these runs up are getting longer and longer. So to me, that tells me the expansion is, you know, finding some legs. And I'm, you know, generally we say stocks that float around these bottoms, you need that catalyst or you need to wait for it to get going a bit. But I think he might have picked one in the early stages.
As I was looking at that bar chart, I'm picturing the swing chart in my mind, and it looks pretty awesome.
Right?
Yeah, it looks very, very awesome.
Well, look, just looking at that, would you like to have a look at a swing chart as we go through it all?
Well, look, you're in charge of the mouse, not me.
I'm looking at this horizontal line across here first of all, and it's well clear of that level. It's almost breaking through the dollar mark there. It could be due for a bit of a pullback though, because 1, 2, 3, 4, 5, it's probably about 12 weeks up already, which is a good sign to see it going up for 12 weeks. But let's just change the chart. We've got the swing chart there, and you can see that it's actually turned up nicely and swung up nicely a couple of times as part of this run, which is really nice to see. So, you know, I think it looks good.
Okay, well, there you go. You got thumbs up there from both of them. Now, if you are enjoying watching and want to see loads more of our content, click subscribe now. Subscribing helps others find our channel so we can help them too. Now, is CSL a buy right now? Well, Liam asks, hi team, I am by no means an investor or trader, but I'm looking to start building my portfolio of the top 20 stocks. I'm curious about your thoughts on CSL. If it breaks that rough $314 mark, I would strongly consider entering the stock at a 15% initial stop loss. It has tested that rough level a few times. However, as it is nearing its all-time high, I think I might need more confirmation. Am I on the right track? I would be looking medium to long term on this trade. What do you reckon, Janine?
Well, it's not a buy now, but his level is great. So I'm glad that he's identified a really strong level he's got up here. You know, there's a number of points here where it's just met resistance across here. Whether you consider it to be within the range or right on top of the range, it's neither here nor there, but at the moment it's pulling back. It could very well find support reasonably close to where it is right now. It's probably come back around, well, it's a bit more than 10% by the look of it. Close to, it looks more like 8, which is interesting. The stock's quite capable of going somewhere around 8 to 10% or so as part of a pullback, a normal pullback, but it's just warming up, it looks like, to get through that high.
Yeah, considering it's had this long consolidation period, which again we've seen with a lot of our market over the last 4 years, and the result of that has been strong breakouts. Now, with CSL, given this company is such a strong company, has proven time and time again that it does, consistently give us those higher highs in the long run. I think if we can break above the $3.14 mark, the safer trade is on the flip side. But I wouldn't be so concerned about the all-time high being a level of resistance, because in the past, particularly with this stock being such a growth stock, I think it'll blow through the all-time high. The real concern, as is mentioned right now, is that $314 level. So if once it gets through there, what can it do on the other side? If you can find yourself a nice risk-reward setup on the other side.
Significant rise.
I think that's the safe place and the better place to watch, and don't be too concerned about that all-time high.
Yeah, I think a lot of people actually do worry about that, don't they?
A lot.
It's a real serious problem that people have. If stock gets to an all-time high and they go, oh, now I'm in a high-risk area. And it's, to me, where does it come from? And I think it comes from that fear of I don't know, the unknown. Whereas, if it's trading from a low and it's coming up, you know where all the previous peaks and troughs are. You know where the support and resistance levels. And I find one of the biggest common things that people use is support and resistance. And I was doing a speech one night at a technical analyst meeting, and this trader was going support resistance, blah blah blah, and beating his chest. And I went, mate, do you think if you know this that everybody in the world knows this? And he went, what do you mean? I go, everybody in the world knows support and resistance. I said, everybody. And I said, as a fund manager, do you think I understand that? And he went, yeah. And I said, I'm only a small one, but do you think a fund manager can move the market around those levels so that it tricks you to buy and sell at the wrong time? And he went, oh, never thought of it before. But that's what a lot of traders do when they get to these really important levels. They go, oh, I don't really know. And they use support and resistance as buy rules and sell rules.
Well, that's why you have a stop loss and manage your risk. Because if you do get an entry and then it goes the other way, then you've got the strategy to get out.
Tough question. Have you, both of you, have you ever used a support or resistance level as a buy or sell signal?
Not as a sole rule, no.
No, it's only one part of analysis. I mean, the buying and selling, that's a whole other topic that we're talking about right now. Yeah.
But I can guarantee you there are people watching that have. And to me, they're not solid buy and sell rules. So what you guys are actually saying to people is it's an important level, but embrace it for what it actually is. I mean, I love blue sky when they get through all-time high. I love it because stocks can just race up, and we saw that so often during that GFC run up, didn't we? The run up up into the 2000. It was so constant. And I know Phil and I did examples of that about 4 or 5 weeks ago on our market report for Talking Wealth. That we just showed stock after stock after stock that if you just not traded after the all-time high, you would have missed out on a monster of money right across the board. And we're getting into that period again, aren't we?
And it's all how stocks get there. It's one thing for a stock to be blowing, expanding 300, 400% into a new all-time high. And then it's another thing to see a setup like CSL where it's accumulating at an all-time high.
Yes.
Because that's showing you that, hey, from a technical perspective, the next leg's yet to come. So.
Well, I think it's important that people know. I mean, obviously we've talked about swing charts and everything else, so it's important you get all that right. But now we've got a text from Daniel, and Daniel says, hi team, I'm just writing in about a former hot stock tip. Dale once talked about AMS, and I am now curious to hear your thoughts on its current state. Thanks, Daniel. It's probably sick as a dog. I remember I talked about this stock and I said, when it gets to $1, buy it, short-term trade. It went to $1.70, and it's interesting then, about 6 months later or 7 months later, or whatever, I got these emails. Should I be selling it now? And I went, well, it's a short-term trade. It's not a long-term one. It should have got out. It was short-term high risk. But let's have a look at it, because I haven't looked at it for a little while.
Yeah, well, I mean, looking at the stock, I can see why it reversed back at that 170. It, hit a previous all-time high almost exact. And our students out there and those who do understand technical analysis would know that, hey, this is a level that you do need to watch for. And it's given a pattern that is a very bearish pattern, if you will. So the following move was to be expected. Now, the fact that it blew through and went down to a brand new all-time high, where it's sitting right now, is the question: is he looking for a buy or what's?
Well, he's just saying because it was one of my hot stock tips. So people that got in when I said and got out pretty quickly would have made a monster on it. But the ones that hang on to it, they still would have. They're trailing around 3 cents now because the stock went into a trading halt for like 18 months, I reckon I was.
But it's a real
They
lesson,
got rid of the
isn't it?
CEOs and all that sort of stuff.
Well, it proves
This
that
sort of stock.
buy and hold. I mean, Bob, we spoke about this the other day. Buying and holding, regardless of the stock, you're always susceptible to volatility. Whether you're holding for dividends or whatever the case may be.
Especially at this level of the market too. I mean, they
Well,
could
yeah.
go off the market completely.
Oh yeah,
I
yeah.
think this is a good, I like the stock, but I think right now it's exceptionally high risk. You know,
Oh, yeah.
because the CEO left and all sorts of stuff, and there's new teams come in, and
I'm glad you
they
mentioned
need
that.
to raise a lot of capital at the moment. There's a whole lot of things going around about this stock, so don't go and buy it because it's around that 3 or 4 cent level. Just do not. I would wait
Well,
for a
when
nice
could you
serious
buy
run
it?
first.
That's the question, isn't it? I mean,
It is.
If we have a look at this, and maybe why don't we just put the swing chart on it so we can see what the opportunity is. Looking at it now, and we talked about before that some of the big runs come off these basing patterns that stocks have, which is what it started to do. But you can see there that the swing is actually going lower in this case, not higher. So we either need to wait for it to get above the top of that high there, that swing back in August, or we need to wait for these lows to start moving in higher lows, moving up before we get it on the way up. Which, could do it, but it's just early days, that's all.
Yeah, I would argue both. Higher lows and higher highs, which we're not yet seeing. We're seeing lower highs. And, albeit that's a higher low, it's gone back to provide another lower low through there. But, just back to the point that you mentioned before, Dale, just applying a simple rule like a momentum line. And, all right, you might not have gotten, and we're on a monthly chart out at 170, you'd be out at 120,
That
130.
protected you.
You
So,
would be.
you know.
My last piece of advice is go and read their annual general report, and if that doesn't scare you, nothing will. But before we let you go, what was your favourite part of the show? Was it our hot stock tip, our topic for the night, or was it our viewer questions? Now let us know by commenting below. Thanks to all of you who will be watching on YouTube and Facebook. If you're watching on talkingwealth.com, stay tuned for more exciting stock picks, insights and strategies, because we'll be right back with that and more. Next week in our main topic, we get into term deposits versus dividend stocks. Which is the best investment now? Make sure you join us next Tuesday night at 7 p.m. Australian Eastern Time. Now, if you love our show, remember to hit that like button right now and subscribe to our channel, as this shows your support for the team that puts in the effort each and every week into bringing it to you. If you are subscribed, then you'll always know when we go live and put up new content. As always, thank you for joining us. For now, goodbye. Good luck and good trading.